Guys, coming at you with another video. Today, I am going to talk about um, the two types of investments. Um, and these two types of investments are ETF investing, and individual stocks investing. And I'm going to talk about what type of investor I am and the reasons why I invest this way. Guys, before we get to the video, I'm not a financial advisor. This video is for information and entertainment purposes, so please do your own due diligence. So again, this topic is going to talk about what type of investor I am. Am I an ETF investor or am I an individual stock investor? So anybody that is a regular viewer of my video probably already knows that I am an ETF investor. And yes, again, I am an ETF investor. And I'm going to give you a few reasons why in a minute. So I used to be an individual stock investor. In my last video, I talked about my 50% mistake, the mistake that I made that made my portfolio drop by 50%. I was a individual stock picker at the time, and I was investing into this really super risky stock, and it was doing good at one point, but it started falling, and I was up like 50%, and then I lost probably 50% of my all-time high. So if you want to see that video, go ahead and watch it. But yeah, now that it is 2026, so actually in 2025, I started investing in ETFs. And here's a couple of reasons why. All right, so the first reason is diversification, right? We have a whole bunch of ETFs. Right now, I think there are more ETFs than individual stocks. We have ETFs out there that have like 500 companies in them, like the S&P 500, or the Nasdaq 100, which has 100 companies, the Russell 2000, which has around 2,000 companies, and I think they have a Russell 3000, which has 3,000 small companies. And these companies, and with an index or an ETF, morally, I'm talking about the ETF. The index has a wide variety of companies inside them, like tech companies, consumer staples, etc. So which which makes diversification really, really easy. Now, it's not 100% diversified, but it is way more diversified than if you just invest in individual stocks. So what does it mean by when it's diversified? That means it is at a much lower risk. Now, investments carry risk, so don't get me wrong. But if you invest in an ETF with a basket of stocks, your chances of losing money will be less. Now, here's why I don't invest in individual stocks. Well, you got to think, guys, when you are investing in individual stocks, it's not just oh, okay, this stock sounds cool. Let me put an X amount of money in it and set it and forget it. No, you cannot just do that, because if you do that, you're going to lose a lot of money. If you are investing in individual stocks, you have work you need to do. There's a lot of research you need to do. You have to worry about earnings reports. You have to look at the 10Ks. Again, as far as the earnings reports, it'll be a good idea for you to listen to those earnings reports. If you have access to that, you have to research the CEO and the management team under them, and to see their philosophy and how they're going to improve the company. So, and also you'll have to look at the balance sheets, the cash flow statements, also the financial statements as well. You'll probably have to look that up like every quarter or every month or so. So there's a lot of work that needs to be done when you are investing in individual stocks. And the thing about individual stocks, it is a whole lot more volatile than the ETFs. Um, with with individual stocks, like I said, you gotta you gotta educate yourself on these on the CEOs and managements, because they can screw up the company, which can mean lawsuits, which can mean the company can go bankrupt. So what happens, like if you have a lawsuit or if the company goes bankrupt? Okay, then your stocks crash, right? Yeah. So think about this. Think about this. Now, if you're an individual stock investor, you're probably most likely you have your money tied up into multiple individual stocks, right? So think about this. Let's say you have your money. Let's say you have $10,000, right? And you have 10, and you are investing in 10 individual stocks. Now, each stock you have $1,000, right? So just think about it. You have to, and these are different companies, right? So you have to look up the CEO in each company. You have to research the management team in each company. You have to look at the financial statements. You have to look at the balance sheets, and you also have to look at the cash flows statement for each and every company. You got to look out for earnings report for each company. You have to listen to earnings calls for each company. You have to go on the company's website and read the 10Ks and any other information that they provide. I mean, there's a lot that you have to do. And, you know, if you're not careful with individual stocks, just like I mentioned previously, and especially if you have, 10 individual stocks, I mean, you're probably going to be, spending around 1 to 2 hours a day, just trying to keep up to date with these 10 stocks. And this is what I like about ETFs. Um, it's a computer that does the stock picking for you. So if a stock is not performing very well, it takes it off the index fund. So let's say, like for an Nvidia, right? Nvidia is part of the S&P 500. So if Nvidia is not performing too well, then that's going to be taken out, right? And it's going to be replaced with another company. And that's what I like it. I mean, I don't have to do anything. I don't have to sell anything. I don't have to buy anything. There is a computer that does everything for me. Now, if you are an individual stockholder and you're watching this video, you're probably saying, oh, well, okay, yeah, I see what you mean, but there's an expense ratio that you have to pay. And and that's fine. I mean, I look at it as convenience, because I don't want to, I have plenty of things to do, at work, outside of work. I just don't have the time and energy to look up, every single stock. So, and the fees are not really, they're like less than 1%. It just depends on the company. Uh, but it's worth it in my opinion. Now, another thing about individual stocks or individual stock pickers is that in the long term, you're not going to beat the indexes or the ETFs, right? Long term. Now, you might beat the market, which is the S&P 500. You might beat it for maybe 1, 2, or 5 years, but maybe in 10, 20, 30, 40 years plus, you're not going to outdo the market. Well, just think about this. If you guys are familiar with mutual funds, now with mutual funds, you have people that are buying and selling stocks, individual stocks, and they don't beat the market. The market is going to always win. So the computer is going to always win, right? And on another thing about the stocks not going to be beaten in the long term, let's take the S&P 500. Let's take SPY, right? And let's compare it to Amazon. And let's look at the past 5 years, right? Now, in the past 5 years, the S&P 500 returned 75%, while Amazon stock, which is an individual stock, which is a high growth stock, it only produced not even 20% return. It's around a 19% return. So that just goes to show you that, again, it proves my point that it's not always going to beat the index. And a lot of these companies can have problems down on the line. Even if they are promising, even if they're high growth. Let's look at Tesla. Uh Tesla really hasn't been doing very well. People have been having like problems with the EV industry, with the EV, vehicles. So it's not been performing very well. So maybe in the next year or two, Tesla will boom. But as of right now, if you put your money in S&P 500, let's say last year in 2024, you probably would have beat Tesla. Now, you guys might say, well, there are individual stocks that are safe, like a Coca-Cola or like Duke Energy, which is a utility company. Let's say Clorox, Colgate, Waste Management. These are all individual stocks, right? And these stocks, not only they have been out for a long time, but they pay dividends. And also, these companies have survived a bunch of recessions and bear markets. I mean, they recovered very well and they have gone even higher. But here's the thing, just like I mentioned earlier in the video, you still have earnings. You still got to worry about the CEOs. You still have to worry about management and all of the financial statements, the cash flow statements, etc. And also, guys, the CEOs right now, they're doing good. They're doing good for these companies. They're being profitable and whatnot. But those CEOs are not going to last forever, right? The CEO can quit or retire, get fired, whatever. And same thing is for management under the CEO. They can retire, quit, get fired, etc. And the new CEO is going to come in place. Now, what happens to a stock price when a new CEO arrives? That stock price is going to go down because there is uncertainty. Because the reason why there is uncertainty, because it's a new CEO, right? We don't know what this CEO is going to do. We don't know what the new management team is going to do. So, it's right for the market to be it's right for that company to be uncertain. It's right for that stock to be uncertain because the new CEOs and the new management have not proven themselves. They have not. Maybe they have talked about their vision, but we don't know if that vision is going to make those companies grow or not. All right, you get what I'm saying? Now, in my opinion, the individual stocks that I mentioned, I don't think they're going to go down anytime soon. I don't think they're going to go anywhere anytime soon. I don't think they're going to go bankrupt. I think they're going to survive many recessions, many bear markets. But at the same time, I could be wrong. Who knows? In the next 50 years, we might have a CEO that may, run the company to the ground. We may have management. There may be management teams that may run the company to the ground. So we don't know. But again, like these stocks that I mentioned, I think they'll be here even after I die. But again, who knows? Guys, that's all I have for you. If you guys found this video helpful and informative, please like the video. Please share the video and subscribe to my channel. Oh yeah, one more thing, guys. One more thing. Here's one problem with ETF investing, right? And I will say this as an ETF investor. Here's one problem. And I think I just mentioned this at the beginning of the video. There are more stocks, there are more ETFs than individual stocks. I mean, we have so many ETFs in so many categories. We have AI ETFs, we have utility ETFs, we have healthcare ETFs, semiconductor ETFs, even like we have like a lot of these investment firms that we have like different S&P 500 ETFs. So we have like the SPY, we have I think that's Invesco, and then we have Vanguard, which is VOO. That's also an S&P 500 fund. So, and we have and there's a Schwab S&P 500 fund. There's a Fidelity S&P 500 fund. And I think this can confuse a lot of investors because they're looking at these S&P 500 they're looking at all these S&P 500 funds, and they're probably thinking to themselves, what fund should I choose? Like, which one is better than the other? Which one is going to produce me the better returns? Now, all of these companies, S&P 500 companies that I just mentioned, they produce very similar returns. They have similar expense ratios. So, I get it. This can create a lot of confusion. Not just with the S&P 500. They have like QQQ. They have different QQQ funds. They have the Russell 2000 funds for each investment firm. So I get that it can be a lot confusing. I'm sorry. I get that it can be way confusing, but which will have people stalling in investing, because if people are not sure on the ETFs to invest, then they're just going to put their cash on hold or spend the cash on something else, or make a mistake or buy an individual stock. And this is no hate to individual stock investors. I mean, there are people who invest in individual stocks and kill it in the market, and there are people who invest in ETFs and they lose money just because they picked the wrong ETF at the wrong time. All right, guys, that's all I have of you. If you like this video, please like the video, share the video, and subscribe to my channel.